The United States of America is the world's largest economy. Yes, it still is. And it's also the home of 40% of the globe's investable assets. I'm sure you didn't know that. So the US, we're starting to see that data gaining some traction. Every now and again you get a bit of a hiccup.
Yeah, the last point is important because, you know, that's where the free cash is that's available for investment in property and equities and so on. And that's why these guys play such a big role in global markets as well, outside of their home domain. Look, this is the S&P 500. You can also, in fact, trade the Dow, but I think it's best we keep to the S&P 500. I would say this one is the one that's the biggest global. And why? Because many of its larger constituents, like Apple and Johnson & Johnson and ExxonMobil, are the largest global multinationals. They make more money outside of America than they do inside of America. You know, it's Walmart is there. You know, they're all there. Every single company that you could conceive of.
So you're enthusiastic about this story, and
well, look, it's gone up a lot.
You just say it's the global index, not necessarily enthusiastic.
I am enthusiastic about it as it happens. Yes.
All right, Chris, are you as enthusiastic as Paul about the S&P 500?
I think, as I say, this would be my second place. From that, but if one looks at the things like earnings are actually declining now on a year-on-year basis on the S&P, and the market's moving up. So this is another example of a market where fundamentals and the market is actually diverging a little bit. Again, just early in the trend, but what worries me about the earnings is that there was a huge fall in 2008, 2009, and that was the write-offs and the recession, etc. Then it's rebounded, and it's basically rebounded back to the 2007 peak. But the big difference is then interest rates were at their peak at 5%, now they're at 0, and you've had millions of people losing their jobs to actually cut the costs to get earnings to rebound, and then they're already rolling over. So whereas I agree that it's a very global play, it's also a very strong US play as well, more so than the FTSE is a UK play. That's why I'm saying in terms of the globalization, but it's less resource, it's more the industrial consumer orientated version. Whereas if you're looking at a global play and you say you want the industrial consumer version, you'd say, okay, S&P is the better one.
If you want the resources bias, then you're
global one, you'd go to the FTSE. That's
so
basically.
You would go for the consumer bias.
Yeah, you know, we manage money for clients in the US, so we've got portfolios with stocks like these: General Electric, Visa, you know, McDonald's, Nike, Apple. So these companies, I think, have got great potential. The interesting thing is when you actually go to New York and you mix with people there, very many of them are still quite bearish. They still worry about these things, but they don't realize the extent to which these global earnings are driving the bottom line. So there's a lot of noise out there. The market has done very well. A lot of those people that are bearishly inclined have been very surprised by the markets moving up, but I just think they're going to continue moving in forthcoming weeks because rates are low. What else are you going to buy?
But let's just go back to the point that this is a global index in the industrial and consumer space.
Yeah, but it's the American domiciled companies that are in this index.
But they operate globally.
But there's an enormous amount of local QE that's mobilizing into this market. So that's why I call it a liquidity-driven momentum market rather than fundamentally driven markets. And that's generally the unease that one has, at least in the short term.
Hot or not on S&P 500, Chris?
As I say, it's my second choice, so I'd be hot,
Still hot, all right. Hot or not, Paul?
No, this is my hottest one.